of collapse following three major lockdowns since March of last year. The Philippine Retailers Association Vice Chairman Roberto Claudio urges the government to rush the delivery dates of vaccines ordered and allow the private sector to acquire the shots directly to vaccinate their employees. Claudio is emphasizing the need for the government to accelerate the vaccine rollout to help the industry recover. Business and government officials have been proposing vaccine bubbles where vaccinated people can move freely, but Claudio says the current problem is the lack of customers and the solution cannot be anchored on the selection of who can enter the establishments. He says retailers have lost up to 90% of their pre-pandemic levels output, and the minimal customer foot traffic and lockdowns have depleted their cash reserves. Claudio says that for as long as strict mobility curbs persist and customers are not allowed to come out, there is no business for stores and restaurants. Moody's Analytics chief economist Stephen Cochrane also flags vaccine shortages as well as ineffective social distancing measures, saying that the country's recovery is still marred by less effective management of the pandemic. Now, the health department warns that we have yet to see the peak of infections in the country. This grave reminder comes just after the Philippines recorded another all-time high in new COVID infections of over 22,000 yesterday. In an interview with the Big Story, Health Undersecretary Maria Rosario Verger said they are expecting cases to continue to spike until September. But Verger emphasized that what is important is to keep severe and critical cases manageable. But managing critical cases comes at a hefty price for many COVID hospitals over in Cebu. Doctors are forced to make heartbreaking decisions as to who gets to use their mechanical ventilators. This change in strategy comes as patients with severe symptoms outnumber the ventilators available in many hospitals. Markets are back here in the Philippines from a National Heroes Day break, but the story is still the same to wake up to. Delta continues to rage. You can see that on my terminal here, the daily case rate just increasing as we mentioned. But we are not alone. Of course, Singapore's daily COVID-19 case count also topped 100 for the seventh straight day. That was yesterday. And the EU countries voted to reimpose restrictions on non-essential travel from the US. Now, on the upside, the vaccine story in terms of booster shots appear to help. There's a third dose which appeared to curb a Delta-led surge in cases and prevent severe diseases in a study in Israel. And of course, here in the Philippines, we're continuing on an extended MECQ until September 7th, plus record high new cases. Still, you can see on the equity side, at least from a global perspective, that there is quite a mixed picture, and Asia looks set to be opening at least in the green for the first few minutes of trade. You can see particularly over in Wall Street overnight, the Nasdaq jumping by 0.9%. That was actually also as if you take a look at August, what happened was the S&P 500 notched its 12th all-time high in August. Especially in the month of August. But if you take a look at the Philippines, let's see how we've been performing in the month of August. You can see on my terminal here that we've actually not fared too badly, despite, of course, those record number of cases, and despite the fact that we've been in a lockdown for basically most part of the month. We're actually up by 5.7% from at least the start of the month. And this morning we are opening as well in the green. We are up by 0.4%. Let's take a look at the movers here. At least for the month of August, you can see Globe Telecom surging by close to 50%, followed by Converge, which is up by 36% in 1 month. So again, these two companies, which are of course in the telco space, are the best performers here, followed by a couple of Gokongwei stocks here, URC and JG Summit. On the downside, you've got LTG leading the losses here for the month of August and sitting out this rally, as well as Security Bank, GT Cap, Robinsons, and First Gen. Now, let's take a look at the banks here, because this is one sector to be watching out for. This, as there is a latest edition of Businessworld's quarterly banking report showing that the combined assets of the 42 universal and commercial banks rose by 2.71% to 18.657 trillion in the second quarter. However, if you look at the year-on-year expansion, it's around 1.02%. That's the slowest in 15 years. years that we've seen. Another interesting part is the asset quality of these banks continuing to take a hit in the second quarter. Bad loans or NPLs rising by 7.5 year on year to 390 billion pesos. Banks, however, still in positive territory this morning, up by 0.15%. Now, here to discuss with us his market outlook as we end Ghost Month, we have with us Luis Limlingan of Regina Capital. Good morning, Luis, and welcome to the broadcast.
Hi, good morning, Danny. Nice to be back.
Luis, let's take a step back and do a review of August. Normally, August, is known as Ghost Month. It's known as a period of tepid trade. But it does seem that despite all the bad news that we've been seeing, despite the GDP downgrades we've been seeing, we're still at 6,800 levels naman. And we're even risen by close to 6% in this specific month. What is going on here?
You're right. Traditionally, Ghost Month during August is when there's a lot of softness in the market, and the fund managers go on vacation. They sell their portfolios, and they just wait and see. Sometimes it's up to some superstitious belief. But what we've seen in the second quarter results, and these were released during August, is that they've actually outperformed. GDP was double digits. It was well above a lot of expectations, even the consensus. Um, Second quarter earnings, they actually rebounded much better. Obviously, they said there's going to be a low base, but this was even better than what everyone was expecting across the board in every industry. And well, of course, the other thing that people were watching was inflation. Is that it already hit the 4% psychological mark because people were getting worried because we're going to hit stagflation, meaning negative growth, but prices are rising. But since it's within the acceptable range of the BSP, there's no need for any immediate response. Now, again, COVID still is a main concern for everyone, whether you're no matter which market you're in. But I guess relative to what we've been seeing, for example, in the US, I remember sometime in June they were hitting around just 9,000 cases, and now one day they're back to 135,000. Perhaps, and this is just my guess, is that maybe the numbers here are much more manageable. We haven't seen the spikes of like 5 to 10 times we've been seeing in the other countries, and again, I think that's how the perception of the foreign funds are. Maybe one is that the second quarter or the first semester wasn't as bad, and maybe we should look at the Philippines. And second, the vaccines are coming out, the numbers are being managed, so it's not as bad as it seems. At least that's one way to look at it.
Okay. Luis, if you take a look at this chart here, is there some sort of trend already of recovery that you're seeing, especially since September tends to be, compared to August, more active. The fourth quarter also tends to have more consumption, more consumer spending, possibly more optimism. Have we already reached the bottom, at least between July and August?
If you just look at how the chart's been moving, it would, the assumption is yes, but I think it's too early to say. I mean, we haven't seen these record cases yet, and we're both not in the medical profession, so I don't want to call anything because this isn't like any crisis we witnessed before. So I would have to say it's too premature at this point. I don't know how it. I hope we all hope that this is going to be the last we see of it in terms of variants and surges. But hopefully, if slowly we reach the target number of vaccines, and then the boosters start coming in, and it all aligns with the election season where we're going to see a lot of spending, then hopefully the upward trajectory will still be maintained. Again, I would just like to caution everyone to just keep a short-term view at this point because everything just keeps on moving. Just the way that we're implementing MECQ or ECQ on a week-to-week basis, and we can't forecast that long. Just goes to show how much volatility there still is in the market.
Okay. Can you at least say that investors are favoring specific sectors or specific stocks at this point in time? Because when we look at the best performers in the past month, it's the telcos. Is this specific to these companies, or is there still a bias for lockdown stocks versus cyclical stocks, even with the entry of foreign funds?
it's fair to state that there is a lot of bias towards the technology stocks, since they think they're going to be the ones who are going to be benefiting with the change in the whole environment, and that's why people are putting a lot of weight on the telcos. If the earnings live up to the expectations, even for the short to medium term, you could still see there's going to be an upside. Obviously, the run up has been much bigger than a lot of expected at a short amount of time. Hopefully, I think if there's some cooling off, I would expect the funds to be buying in to make up, for that weight loss. And then, of course, for the consumer, I think it's going to be selected which ones are going to be benefiting for the election. With the changing environment again, how is the campaign season going to be modified? So, with what will they be spending their proceeds on moving forward? So, I think that's what they're looking for. And I think the last sector that everyone is also probably checking is the power sector. There was
Okay.
supposed to be shortfall on the supply side, which didn't manifest
Mhm.
last year. And I think we're seeing hints of that when we saw during the summer season there were yellow alerts. And obviously, the power companies have still been performing well. And you can see that there's been some buy up towards these same companies over the last few days. So probably we'd be looking at those sectors, moving until next year.
Okay, and speaking of power sector, you do have First Gen suspended right now, saying their investors, so Philippines Clean Energy Holdings, planning to acquire between 3 to 5.7%. Interesting part here, Luis, is they're doing a tender offer at 33 pesos versus the previous price of 28.3. What does this tell you about the prospects of First Gen, and why are investors, what's the reaction going to be when this suspension is lifted?
Well, given that it's going to be 33 pesos, and that's more than around 12 to 14% of where it was previously been trading, I think that's going to be very attractive, and it shows the signal that one, not just for FGen, but a lot of the companies in the power sector, I think, are still undervalued. Second is the move of a lot of these companies that are moving into the renewable space. We've seen the likes of Boitis, ASEN, leading the charge, and this is probably the strategy that's going to move forward. It's also going to be attracting a lot of these foreign funds.
Mhm.
Um, so I think yes, I mean we think there's still a lot of value in FGen, but I guess given how market conditions are, I think it's a fairly good price already for those that are coming for the investor that's coming in at 33 pesos.
Okay, and finally, before we let you go, Luis, I just wanted to go back to the telco space on Globe being the best performer, at least in the past month. And of course, rumors swirling on an IPO of Gcash. To what extent is this jump fundamentally justified if they're able to already leverage on their fintech unit?
Well, for the longest time, people have been pushing for the telco space. That's one. Second is, as you're saying, the rumors about the planned IPO of its subsidiary. Well, if they're going to be able to fast track it, then maybe the valuation is justified. Um, but all depends on their timeline if they're able going to push it. But you can see that people are based on the movies that they're really betting strongly that this is going to happen if they're that bullish on its prospects and how much the valuation should command uh, moving forward. So it's really it's really an assumption as to how much it should really be,
Mhm.
given that the plans next year. So again, it has to deliver, so at least you can justify that valuation.
Okay, so keeping a close eye on that, whether they will be delivering their promises there. Thank you so much for those insights as we end August. That was Luis Lumlingan of Regina Capital. Checking in on the biggest headlines, we're keeping our eyes on the finance department is pushing through with its plan to privatize mining here in the Philippines. This as it looks for new sources of income amid the prolonged pandemic. Finance Secretary Sonny Dominguez says the Basay Mines project will be the first stop for privatization. The PMO estimates that Basay Mining may have at least 105 million tons of copper ore and could generate at least 1 billion pesos in revenue. However, in October, the DOF said both the Basay copper mines in Negros Oriental and the nickel mines of the MMIC cannot be operated due to legal concerns. Dominguez adds that at least 30,000 assets, mostly idle mines and foreclosed properties, are still up for sale to the private sector to raise funds for pandemic response. Although he admitted that the government is facing numerous challenges in transferring the assets to private hands. These include legal claims from former owners, security matters on site, and the valuation of the idle properties. Now, NEDA says it supports a pilot test of face-to-face classes in low-risk areas for the incoming school year, which is set to open next month. NEDA Secretary Carl Kendrick Chua said the country can learn from the pilot test how to gradually reopen in-person classes for more schools. The IATF is set to review the pilot testing proposal before making a recommendation to President Duterte, who has rejected proposals to resume in-person classes several times in the past. The Philippines is one of only 5 countries that are still not allowing face-to-face classes since the pandemic began last year. And that's a first look into the business day. Today is Tuesday, August 31st, 2021. Catch Businessworld live for the market closes at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.